24th of November 2019, and this is the dollar index chart, weekly chart. So if I do this, you can pretty much see that we are in a bull trend, but that bull trend certainly has been slowing down lately, and it would have been extremely difficult to hold longs over the past, well, 6 months really, going back to this time here in May, April. So I would describe this as becoming more of a sideways trend recently, and if you look at the daily chart, you kind of see that a bit more, don't you? Especially if I roll this back to the summer, beginning of the summer, sort of July time. July we were still going up, and then since then we've pretty much just gone sideways. So that makes holding a position for more than 2 or 3 days very difficult indeed. It really is scalping opportunities only in the dollar index. The dollar versus the Aussie is sort of a mirror image really, with bit of a downtrend going on here, as you can see from this chart going back to the beginning of last year. More recently, again, more of a sideways direction with the Aussie versus the US dollar. We have held a good trendline resistance, which was the general idea. We were selling it up there, and that has certainly worked. At the beginning of November, we continued to drift lower. We broke the 100-day moving average. We did have a little bounce a couple of weeks ago, and that bounce was held by the 100-day moving average, which was also kind of expected. So the outlook remains pretty negative. Just having a quick look at the weekly chart, you can see that trend line just a little bit better there, a bit clearer. If I just do this, there you go. But certainly still very clearly in a downtrend for the Aussie dollar, so we would of course favour selling into strength. New Zealand dollar, the picture is less clear. Certainly more of a sideways direction, as you can see, since the middle of August. We did continue to decline into the end of September. We bounced back and certainly seems to be more of a sideways action at the moment. 100-day moving average seems to be holding the rally at the moment, so I would favour moves to the downside, especially as we become a little bit overbought in what is a longer-term bear trend. But I do think the picture is less clear. What I would suggest is if we start breaking above 64.70, 64.80, that we would look quite positive. Obviously, a move above last week's high of 64.37 would be an initially positive move, and would certainly have signalled that we've cleared the 100-day moving average for a short-term positive outlook. The US dollar yen, I think the important signals are in the weekly chart. We have been in a bearish trend on the weekly chart. Kind of bearish trend. I think that more recently we've recovered over the last 3 months, of course. Now we have a trend line. I think I'm going to need to show you where that trend line comes in from. We have a trend line going back here to late 2016, and you can see that that trend line has now become a good resistance level. We rejected it earlier in November, and that was just below the 100 and 200 week moving averages in this less important trend line here. So there are a lot of hurdles for bulls, and we've actually stumbled at the first hurdle. So for this chart, I would certainly favour moves to the downside. We've moved into overbought territory on the weekly chart, so that helps to support the idea of a move to the downside. When you look at the daily chart, we've also broken out of this upward channel, which is another negative signal. We seem to be hovering. We seem to be trading sideways. We're now just hovering below the 500-day moving average, so I would say that that's negative as long as we hold below there. I would need to see us in really above 109.00 before I could even think about getting more bullish about this market. We appear to be holding the 55-day moving average, which I don't see as particularly strong. I'm going to actually move this little screen over a bit. There we go, so we can see the values. 55-day moving average at about 108.30 seems to be offering support in the short term. I fancy a move to the downside, so I would lean on the side of a move below here. That's all right. I think that we can expect, and then we can target the 100-day moving average at around 107.80, 107.70. As I say, we need to get up through 109.00 for the outlook to turn a little bit more bullish, but I see that as less likely. The euro-yen chart, very clearly negative when we look back to the beginning of 2018, clearly in a bear trend. Weekly stochastic starting to turn negative from an overbought position, so that certainly gives us quite a negative outlook. Daily chart shows a little bit more of a sideways action, and we are in a sort of recovery channel, as you can see by these two trend lines. For us to continue the bear trend, we'd need to get below the 100-day moving average, which is around 119.40. Then if we break this lower trend line, that's of course going to add to the negativity, which will be just below 118.90. Otherwise, if we hold above 119.40, I think sideways action. I don't see much scope for a move higher at this stage. If we were to move higher, we're definitely going to run into resistance from previous highs around 121.40, 121.50, and by the time we get there, that 200-day moving average would have dropped to around that level, adding to the weight of that resistance area. Euro US dollar chart is a bit of a mess. It's certainly one of the messier ones. So many markets are in sideways trends, but this one is probably the hardest to read for me at the moment. This and the Canadian dollar, I'd have to say. We have a very short-term trend line down here at 110.11. We've got resistance from the 100-day moving average. 100-day moving average really seems to be doing its job on many of the Forex, or at least the dollar pairs at the moment. So we would need to get up through 111.00 for anything more positive in the short term, and even then we run into a fairly significant trend line at 111.36, and even 200-day moving average at around 111.70. So there's really only sort of 30 pip moves that can be expected on any break above 111.00. US dollar versus Canadian dollar, tricky again, mostly in a sideways trend as we look at the weekly chart. We're heading up towards test recent highs. A retest of recent highs, 133.45, 133.47, this spike high 133.44. So the mid 133 area is obviously going to be strong resistance. We're going to have to get up through 133.90 for the outlook to be more positive. Selling up around here, I would suggest, could be a good idea. Clearly, there were sellers last time we hit this mid 133 area. There's the horizontal line, so that's as good a strategy as any if you're trading this pair. Gold at the moment is trading in what I believe to be a developing bull flag situation. So we're trading within this flag at the moment. I don't know how long we'll stay in it, but we do have support around 14.35 this week. We would need to get up through $1,500 for the breakout buy signal. In the meantime, I guess it's safe just to trade within those parameters of the flag. And wait for the breakout. The daily chart isn't really telling us anything else. 100-day moving average did a job again as resistance, as it did in so many of the Forex pairs that I've already looked at today. So that will be key in the short term, 14.80, 14.85 probably by the time we get any recovery to test that level. As I've already said, 14.30, mid 14.30 area on the downside. We're going to have to get up through $1,500 on the upside if we're going to get any longer term buy signal in gold. For me, the silver chart is less easy to read. We haven't had the sustained bull market that we have had in gold. I guess you could call this a bear flag situation, but it does a bull flag situation. Sorry, but it doesn't really fit in with the recent history. This isn't a really strong enough move to the upside to sustain this as a flag. So whilst I'm not bearish because we're holding above the 200-week moving average, we don't have a pattern here which I can really identify to trade. But I'm going to use the moving averages and suggest that as long as we hold above 1650, then the outlook is positive. I don't think the daily chart is really giving us any extra information, not really, but I suppose I would say that we've got trendline resistance around 1740, 1745, 1755, so if we can break up through there, that should be a buy signal. Euro versus the Canadian, I could argue that this is a rounding bottom. I could argue that the daily chart looks quite positive, because we've broken above a very short-term trend line, only goes back to the beginning of August, but we've also broken above the 100-day moving average. Now, broken above it and come down to retest it. So this is possibly a buying opportunity. It's decent enough support if we can bounce off there, which is around 146.50, 146.40. Then we could get a fairly decent sustained move to the upside. Certainly a retest of the recent high at 147.70. And once up through there, I don't see that as a particular strong resistance area. Then we can start testing 200-day moving average, which will be around sort of 148.20, 148.30. So could be worth a long position here with a tight stop. What's this peak? 146.24. Yeah, I guess if we were buying it around 146.50, 146.40 with a stop below 146.20 or even stop below 146.10. Give ourselves a bit of room. That could be a trade with a decent risk reward. Dollar Swiss has been working quite well for us over the last 2 weeks or so. We've been buying it on this is the weekly chart. We've been buying it around these obvious support levels from the 100 and 200 week moving averages. Last week we had another nice move off there. So if you jumped on that trade, that's looking pretty good. Now, I did suggest that we'd find some resistance around 940, around 99.40, 99. sorry, 99.50, 99.60. I didn't think that would break yet, but it has. Now we've closed the week above there, and bearing in mind the bullish looking weekly chart as we bounce off those very important support levels, this looks good. I've already taken my profit on the short, and I did, sorry, on the long from down here, and I did actually get stopped on the short position, so I'm going to be looking to jump back into a long position on the open on Sunday night or Monday morning with a stop below 99.40. This could be a really good swing trade. This could be a position that we can hold on for a significant period of time in the days and weeks ahead. Euro versus the Norwegian krona. We're looking at I'm going to look at the weekly chart first actually and show you how this is a pretty good bull trend, very good bull trend. So looking to buy into dips on this market for obvious reasons. We're going to stick with the trend. There's nothing telling me that this is about to collapse. Our system is trend following. My strategy is trend following, so we look to buy into weakness, and we've done that. We bought into weakness on this dip down here. Good support around around 10.04, 10.03. I'm still holding longs. I didn't get out of this on the rally up to 10.18. We have dipped a bit further than I'd expected, and I would need this to hold above sort of 10.07, 10.05 for the bull trend in the short term at least to remain intact. A break below 10.02. What was the previous low down here? 10.02. Yeah, break below 10.02 would mean that we get a further deep correction. I will be looking to buy into that further deep correction, but I would have to get out below 10.02 because that would risk further moves to the downside. A lot of pairs against the dollar are in a bear trend. A lot of pairs against the yen, Japanese yen, are in a bear trend, and the Aussie versus the yen is clearly in a bear trend. And if we actually spread this weekly chart out over the last 2 years, you can see a much clearer bear trend. So selling into resistance is the ideal strategy, and certainly selling into this trend line would have worked a couple of weeks ago. Now, we are holding a little bit of support. It's not major support, but it's good enough. We're certainly holding anyway. 73.60 from the 100-day moving average, 73.50 from the 38.2% fib. So, we've got a little bit oversold. Now, longs here are risky because you are trading against the trend, but you can have a stop below 73.30. So it's a relatively low risk trade, and if we do bounce and we do start to recover and we do unwind an oversold situation, we could head up to certainly 74.40, 74.50. And if we get up to the trend line again, which coincides with the 200-day moving average at around 75.50, 75.55, so you probably want to be selling around 75.45, 75.55 with a stop maybe above 75.75. That looks like a pretty low risk trade, trading in the direction of the trend at a strong resistance level. So let's see if we get that opportunity. If you're watching this video, I do release my subscriber videos a couple of days. Sometimes I release them a couple of days after I've posted them for subscribers. If you're not a subscriber and you're interested in having a look at what we offer, go to daytradeideas.co.uk. There's various markets you can subscribe to for a daily report. You get the weekly video, obviously, that I do publish, and then if you want the best package of all, go to our premium package. It's great value, and you get videos, you get a spreadsheet with trades on, you get reports on all the markets. It's absolutely everything you could possibly need to make consistent money in the financial markets as a day trader.